Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave.
Hey, welcome guys to another episode of Real Estate Talk. My name is Dave, the whiteboard holder, and this is Jay Investor. You're probably wondering why I'm holding a whiteboard. We're going to go over some numbers today. We're actually going to talk about how Jay Investor bought a house with his 401k.
Yeah, so I get this question all the time, like what's better, we got a 401k or real estate and all this and that. And honestly, it's a mix of different things, right? We're going to definitely drill into that. This is just a scenario that I worked out. Not financial advice. It's just kind of like, I don't know how that looks there. Does that look really good?
Speaking of financials, we need some brighter
Yeah, we need to start getting something there. But hey, it's all about like content, right? So let's see if this is good information. Oh, there you go. Dude, that looks way better. That's way better. All right, so we don't need to buy the pens now. Yeah. Okay, cool. So definitely, if you like what you hear here, this is all community, right? Like, share, subscribe. We want to hear from you. It's all about the comments and things like that. So yeah, you got a good angle there. Good angle there.
There you go.
All right, so
awesome, chat. Well, why don't we talk about a little more about what made you think of this? Like, were you just kind of just like, where can I get some cash right now so I can get this house going? Or, I think it was maybe, what was it, the second or third property, right, that you were looking into? Or
so it was actually the fourth property.
Okay,
we were looking at the third one.
I know it was pretty early.
So I was looking for the third one.
Okay.
And then while I was looking into that, I was like, how can I get the fourth one really fast?
Got it.
And I know this one we did within 5 days of another house.
Okay.
Right. And so I told you this idea, like, let me just take out the 401k. And what I had in the 401k
Did you think you were crazy? Like
so my wife thought I was crazy, right? So basically, like, just so everyone out there's all on the same page, right? Good thing about a 401k is you can set some money to the side. Usually companies say you can put up to 6% of your salary. We'll match up to 6%.
Right.
So there is an opportunity there to get what we call free money, right? That goes into a 401k.
Got it.
But you really can't touch that until you're about 60-something, 65.
Correct, right. Without getting like a penalty or something.
Without getting a penalty or something like that.
And that like scares a lot of people away.
It does scare a lot of people.
We can't touch it,
It does scare a lot of people, right? But hopefully with this example here, you see something that I went through and maybe you feel a little bit more confident in you doing that. Mm-hmm. Just because the percentage of return is so fast and so huge.
Yeah.
And I actually did it at a really good time where the value was really high on it before we had this like bear market where it's kind of like going down. And all those things are mutual funds and things are all in the stock market. They work the same way. Stock market's green, 401ks are green, right?
Yeah.
Right. So I did that right before the dip.
Right. Okay.
So I did it
right before the dip.
Right at the high.
You sold at the top. Let's go.
Yeah. So I sold at the top.
Right.
So it was $98K. You want to put that there? Yeah. $98,000. So what happens with this, as you can tell, I'm not 65 years old. So because of that, when you went to take it out, they took about a $20,000 penalty.
Okay.
Yeah. Wow. So $20K
loss.
Right.
Okay. So
right from the get-go. So I think the angle here is kind of...
Okay. Sorry.
That's okay. No worries.
I'm
right there. Cool. Okay. So 78K is what it actually ended up being, right? Okay. So if we do the math, the 401k house that we bought, right, was... It was $375 or something like that.
Okay.
It's a house. $375 house. That was the value of the actual house, right? $375. So because of that, you have to come out of pocket with 20% or whatever of what you need and stuff like that.
Yep.
On closing day, it was actually $78K exactly that I needed.
$78K. Look at that.
It was the down payment completely. So this happened like somewhere like in June of 2021 or something like that, right?
Got it.
So from that moment to when I actually did my taxes, so I lost the $20,000 initially, right? Because that's the kind of conversion thing that they do with the penalty and all that. It's tax you're paying. You're paying tax.
Correct.
So it was $78K. By the time June came around, went all the way to do my taxes like around April or something like that. What I had to end up paying on that was going to be somewhere around 10%. So I had to pay an extra $9,000.
Okay. So on top of that, so
$9,000 in taxes. Right? So you could put here like $9K
minus $9K
in taxes.
Yep.
The cool thing is though, if you look at what's happening here is I actually had $78K in my pocket.
$67K.
Yeah. Yep. I actually had $78K in my pocket. I actually went to the closing table with $78K. And then I started the stream of income with that 401k house. And if we're tracking it, I buy all these houses with the same amount, profitability and stuff like that.
Yeah.
I thought this house was going to make me $3,000 a month. But the property ended up making me $3,700 a month because I did some other things.
Why'd you make that sound like a negative thing?
So I did a very bad forecasting there.
I thought it was 3,000, but it was only 37.
It was 37 because I saw the opportunity to open a storage unit in the basement.
Okay.
I was able to fix and repair the first unit.
Yes.
So instead of getting $1,400, I got $2,000 for it. I had a parking lot, so I added that into the mix. I raised the rent on the second floor, raised the rent on the third floor because they haven't had raises in 5 or 6 years.
Man,
so yes, so I struggled to make $3,700 a month. That property now is making around $4,000.
Yeah.
So let's just go with the $3,000 thing we went.
Okay.
Even though we know we made more than that.
Yeah.
So we got this in June, right? From June all the way till April is 10 months. So 10 months times $3,000 is $30,000. So $30,000 of profit. I lost the 20.
Yep.
I gained 30.
Okay, so in 10 months. Right?
Yeah.
Months.
Conservatively, because we just used $3,000. We didn't use the 3,700 that I.
So in 10 months, you literally just made back your
The
original
loss.
plus 10K of your original 401k.
Correct. So I kind of netted on that.
Right.
Plus, even with the $9,000 that I lost in taxes,
Correct.
I had that all paid back. I was up $1,000 up in loss.
Okay.
Plus, I still have the 78K. This is a big misconception when people are going into real estate.
Yeah.
I paid 78K. I lost 78K. I didn't lose that.
Yeah.
I still have that in equity in this house.
Yeah.
If I sell the house tomorrow, I get 78K plus whatever value it appreciated,
Correct.
plus all the cash flow that I held for it. So the 401k house, as of this point, has been a success.
Correct.
Right? It hasn't been an issue. Right? So after these 10 months, because obviously there's still more months after 10 months, I'm still making more money off of this property, and it's like $4,000 right now a month, right? And just this one property. So it continues to go up and up and up and up and up. Now, if we do the math on that, and I'm going to do simple math here so that it's easy to follow.
Okay.
It's $3,000 a month.
Right.
Forget about the extra stuff I was able to make. Forget about the rental raises that I'm making every year there on that.
Okay.
Let's just go flat $3,000. What happens is we have option number one is stay with the actual 401k at 98K. I would have lost in the bear market a little bit. Bear market would have bought some things back. It would have gone up a little higher.
Right.
Let's just say at the end of this thing, I would have cashed out at 65. This would have been somewhere around 3x. So let's say around $300,000 I would be able to take out.
At 65. Well, let me erase this real quick.
It's okay.
So everyone's pretty much caught up here.
Yeah.
If not, you can rewind it.
Let me help you here.
There we go. All right. So let's do this because this is super important.
Yeah.
Because, I mean, you're going to see the numbers. You're going to kind of get blown away.
Yeah.
So at 65 years old, it's like what? Like maybe like 10 years away from each other?
10 years away. Oh, I love you, D Investor, whatever your name is.
I love you.
More like 26 years from now?
Yeah.
Yeah, so 26 years from now, 98K
So 98K
would turn into, let's say, 300K.
300K.
That's just sitting in mutual funds, goes up 6 to 8%.
Yeah.
Let's give it the benefit of the doubt, say 300K, right?
All right. Yearly, right?
Yeah.
Yearly.
That's 26 years from now. That's what my profit would be.
Correct.
Okay. Now, if we're looking at the other side, the 401k house, right?
So this is just 401k.
Yeah.
Now this is 401k
House. Yeah. Okay. So if we look at it this way, right? We still have the 78K that we put into it, the equity, right? Mm-hmm. Okay, that kind of stays there. You have the cash flow of, let's do easily $3,000 a month, right?
Yep.
So we say $3,000, which is totally a great income off of just one house. We multiply that by 12, we get $36,000, right? It's kind of the numbers we've been going off of everything, right? This scenario is a little bit more aggressive. It's actually more successful than my formula. But if you multiply that by 30, and the only reason I multiply by 30 is because we have a 30-year mortgage on this.
Correct.
Right? So let's multiply it by 30. The income on this is going to be 1.08 million. But what happens this is 26 years from now, right? This is 300 grand, 26 years from now.
Right.
4 years more, this is 1.08 million.
Correct.
In cash flow.
Right.
Right? But what happens to the original price of the house? The 375, the mortgage has dropped because we no longer have a mortgage. So add on the 3.08, let's just say the house is worth 400K, which is only 25K more, which is, let's just say 400K more.
So plus
400.
Well, just owning that property is already, you're already here at 300K.
Exactly.
400K, yeah.
Exactly.
So you're not
free and clear.
1.48. Yep.
Yep. That's free and clear, right?
Yep.
You owe nothing, right? And when I look at the gross amount of the actual rent, at this point, you would still be collecting about 5 to 6 grand a month.
Oh yeah, no, of course. I mean, because
you have no mortgage,
right? You have no mortgage, and also this doesn't even include yearly raises.
Exactly.
So
by pulling this 401k out, I took a $20,000 to $29,000 loss immediately, but then just by tax time, that 10-month little cycle that I did, I broke even.
Yep.
And everything from there on out has been profit, right? So the difference it made here though was $300,000 to $1.48. So it's $1.18 thousand of a difference.
Wow.
In just making this 401k change.
Yep.
And if I would have had real serious money, I would have done 3 houses or 4 houses or 5 houses.
Well, that's what I was going to say next. Yeah, is that you wouldn't just let this to stay on one house. You would just use that profit, and now you have 5 houses. And by the time 30 years comes around, not even 5 houses, 30 years, you can get.
And the thing is,
50 houses.
We did one house here, a linear example.
Exactly.
Right.
Yep.
And this is if it just stayed at that, right?
Correct.
Is what happened here. But realistically, if like what you just said is key. If we would have done the thing where, if you guys saw that video where we were talking about the calculator, right? We would have just started rolling these $3,000 a month into buy the next one, buy the next one, buy the next one.
Yeah.
This number is not only at 1.48 million, this is probably a portfolio of about 30 to 40 houses easily.
Yep.
Right? Which would multiply this number by that much, right?
Exactly.
Over and over again.
40, yeah. Yep.
So this small move here can be a huge result.
Absolutely.
Right?
Absolutely.
And that's the whole goal. Like with real estate, the return on investment is so quick.
Yep.
You know, you can double your it doesn't look like you can double it in the beginning, but you can definitely double it in a 3 to 4 year time period, and it just keeps snowballing.
I mean, that's eventually what you did, because that house for $375.
Yeah.
You held it for about a little over a year and a half, right?
Yeah.
And then you refied it. And what did you end up refining it for?
Oh, that one went from $375 to $495. That was a different property though, just so that we don't mix it up. But
it was okay.
Yeah, this is a different property.
Got it.
Yeah.
Okay.
But the 401k house itself,
Yeah.
like let's understand that. I'm not saying this is a bad option for you, and you probably will deal with a lot less headache. I just prefer a little bit of headache for 1.48 million.
Exactly.
And this can get me to financial freedom.
Right. And then we put it all into XRP. That's it.
XRP, baby.
Not financial advice.
Not financial advice. You do whatever you want to do, but you know.
I wouldn't be mad.
No, but realistically, right, you have so many options.
Right.
You can use this cash flow to keep going into real estate. You can have this invest into something you're more passionate about.
Correct. Right.
You want to try crypto, you want to try other stocks, you can do that.
Right.
That's
right.
however you want to do.
You know, I'm hoping in the future, like, we're going to have an episode that's going to be called The Crypto House. You know, where we're going to have our crypto assets, and then, you know, we're going to have to find a house with it, you know?
Yeah.
You know, and then, I mean, there's a company actually called Proppy. They do real estate contracts.
Yes, they do.
It's pretty cool. So we got to look into that one.
Yeah. There's a couple houses that have been sold with crypto already.
Yeah.
Actually, interesting enough. So, yeah, so, you know, I'd really love to hear your feedback on this. You know, like, comment, subscribe. Let us know. Is this a good explanation of what, like, 401k can mean for you? Do you feel like I answered the question? Did I leave anything out? I really did try to hit on all the different losses that I hit on there. This is a real scenario. So let us know. We're interested.
Yeah. Awesome. Perfect. Yeah, I think that was great. Good information. And, we'll see you guys on the next episode.
Episode 7 in the books.
Go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave.